Ladies and gentlemen, my name is Greg Mikulowski from ForexLive.com. Let's take a deep dive into the Aussie versus US dollar. Take a look at the daily chart and take a look at the hourly chart. Try to make sense of it from a bias perspective, from a technical perspective, from a risk focus perspective. So let's get started. All right, let's take a look technically. What we know most recently off this daily chart is this trend line right through here. We came down to it and tested it in trading at the end of October, and the market found support buyers against that level. And we started to rotate back to the upside. That's pretty much corresponded with rising U.S. stock prices. Stock prices move higher, tends to send money into the risky or quote unquote pairs, including the Aussie versus US dollar, and the market moved up. But we moved up toward the 100-day moving average. That's the blue line in this chart. It's moving lower, and the market found sellers not right at it, but near the level. You can see the price moved a little bit above that 100-day moving average right here, and then rotated back to the downside, closing below the level. In the past 3 days, I've seen a move to the downside. We have China now on the other side, which is showing slower growth. We saw inflation data come out of China today, which was a negative from both the CPI and PPI data. But despite that, we are seeing a rebound back to the upside in the Aussie versus US dollar and trading here today. Also, US stocks are a little bit lower today, so it's kind of a maybe a technical buying opportunity here, or what might be what is happening in the market. We will see. Maybe it corresponds also with these high prices from October, where the market came up toward the 0.6395 level. Let's call it 0.64. We did move a little bit below those levels, as you can see in trading here today, but we are rebounding, currently trading at 0.6423. So from a technical perspective off the daily chart, we held support at the lows right here against the trend line. We held resistance against the highs right here against the 100-day moving average. We are in between those levels, almost near the middle of it at today's low, maybe a little bit more to the upper side, but we did find support against the 0.6395 area. That's the daily chart. Now let's come in and take a look at the hourly chart and see what makes sense off of that chart from a technical perspective. And if we look at the hourly chart and put a Fibonacci from the low price that we saw at the end of October, that's this low right here, to the high price that we saw just last week, which took the price briefly above the 100-day moving average. You can see that right through here. It wasn't necessarily briefly. There was a number of hourly bars that stayed above that level, but you can see how the market failed at the 100 and then started its rotation to the downside. 3 consecutive days to the downside. So now the price low that we came in here found support buyers near the 50%, or right at the 50% retracement, I should say, in trading yesterday. In trading here today, the market did move below that 50% retracement, not only here, but here, but the momentum could not be sustained. We couldn't get down to the swing area, and we started to rotate to the upside over the last 3 or 4 or so hours of trading. We've now taken the price back above the 200-hour moving average, and we are holding support against that level. So technically speaking, we tried the downside. We tried to get below the 50% retracement. We couldn't do it. We fell below the 200-hour moving average. We can't stay below it. Are the buyers making a play? They're trying, okay? They're trying to make a play. We did fail on the moves above the 200-hour moving average here earlier today, so it's not necessarily in stone that we're going to hold this level. But if you are looking to buy the Aussie versus US dollar, maybe sell the US dollar, this might be a level that you can lean against, where risk is defined and risk is limited. If the price were to move back below the 0.6417 level with a little bit more momentum to the downside, give it a few pips, then we could see further selling, and it's time to get out. So risk a little to make more than a little. What your hope is that the price and the making more than a little starts to move up toward the this swing area up here between the 0.6445 and 0.6455 level. Also near that level is the 200 or the 100-hour moving average. That's a blue line in this chart, and so that would be the target on the top side. So what I'm saying is risk a move below this 200-hour moving average for the hopes that we get up toward this area. And if the market gets above that area, that would open the door for further upside momentum. So there you have it, a deep dive into the Aussie versus US dollar from a technical perspective. It's a little longer than usual, but I wanted to get it all together in one big package for you. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.